As the year's almost over, I want to just shoot off a few ideas revolving income taxes on crypto. Before that, I do want to say that this video is not financial advice and shouldn't be considered as such, as everyone's financial situation is different. Please do speak to a tax specialist about your specific situation and what's best for you. This video is just me spouting off some income tax ideas relating to crypto and why you would want to legally reduce your taxable income as much as you can. That said, let's get started. So the reason why you want to reduce your taxable income is because of how marginal tax rates work. Pretty much the idea is that as you make more money, the higher your proportional tax rate is. Unless you were extremely wealthy, then this notion can be somewhat circumvented with creative ideas. So if we look at the federal tax rates for 2022, this means that everyone starts off paying 15% up to $50,197. And then after, for each dollar earned above this, the rate is 20.5% up to $100,392, and so on and so forth. In addition to federal taxes, there are provincial taxes. Here's the chart for each province and their tax brackets. As you can see, each province will have their own set of brackets and amounts, which can significantly differ. As an example, someone making $100,000 in Alberta versus in Manitoba, the person in Alberta would pay less in taxes. I also want to address another important consideration. Basically, your income for this year will determine your eligibility or how much you can get from the government for some tax credits. I can't say that I understand how all of them work, but I do know for a fact that with the Canada Child Benefit, GST/HST credit, and the Canada Dental Benefit, your income will determine your eligibility or how much you would receive from them. Pretty much though, the higher your taxable income, the less you can get from these credits. Here's an example of the math behind the Canada Child Benefit. As you can see, the more your taxable income, the less you would receive. Here's the family income level qualification for the GST/HST credit. And lastly, here's the eligible amounts based on one's income for the Canada Dental Benefit. Just as I had said, the more you make, the more you pay in taxes and the less you get back in credits from the government. Now, in my opinion, it's always better to make more money than less money, but that's only if you're well beyond the top tax brackets for where you live. However, when you're in between the brackets where your eligibility of credits or how much you can get back from the government and what percentage your marginal tax bracket is, my opinion then changes. With all of that said, there are really only two ways that I know of to reduce your taxable income. There really isn't much that you can do to reduce your taxable income in Canada other than by realizing losses and utilizing allowable deductions or write-offs. In terms of utilizing losses, how they are categorized matters. For example, a capital loss can't be used to offset employment income, only capital gains. That said, let's take a look at this example. You have realized a capital gain of $10,000 from Bitcoin. You also bought $2,000 worth of Doge that's now worth $1,000. Now, for the purpose of this example, the Doge would be deemed a capital loss. Therefore, you could sell the coins this year and write that $1,000 capital loss against that $10,000 capital gain. So your overall capital gain is $9,000. This means that only half of it, which is $4,500, is included in your taxable income versus $5,000 if you choose not to offset your capital gain with the Doge loss. As a side note, there's something called a superficial loss, which only applies to capital losses, which is why I said the categories matter. This rule or stipulation was put into place to prevent people from harvesting or utilizing quote unquote fake capital losses for tax purposes. The CRA doesn't allow you to sell something at a loss and immediately buy it back up just for the purpose of utilizing that loss. Essentially, for the loss to be recognized or realized, you or anyone affiliated to you can't repurchase the same thing or something similar to it within 30 days. Otherwise, the loss won't count. If you do repurchase it within 30 days, however, then you would add the superficial loss to the adjusted cost base of the substituted property. This is why you'll really want to think through whether or not you're wanting to sell that Doge for a loss. With that said, if you're on the fence for selling some crypto this year, here's some considerations. The first would be where you are in your tax bracket or eligibility or amount for a government credit. The next would be your projected income for next year. Do you know for sure it'll be lower than this year's? If you know for sure that next year's income will be lower, it may be better to wait to sell your your coins next year. The last is your outlook on the price of your coins. There's a possibility that the price goes down when you want to sell next year. It very well could be possible that the coin goes down more than what you'll be saving in taxes or getting in credits by the end of this month. In that case, you would have been better off selling your coins this year. On the flip side though, the price could very well go up. No one knows. The point is that these are very important considerations to think about over the next couple of weeks. This is why you'll want to think really hard about realizing any gains or losses that you have this year or next year. Now, this last idea is on how you can potentially hold off on needing to sell your coins, regardless of whether it's going to realize a net positive or net negative taxable event to your income. This idea may not be applicable to everyone because not everyone's going to have access to a secure or unsecured line of credit. Now, if you do have access though, an idea would be to use your line of credit to hold you out financially until you feel comfortable selling. Again, that has its own set of risks involved with it, so please do consider that you would essentially be using borrowed funds for your investments. In other words, you're leveraging your position. That said, thanks for staying to the end.